Some people looking at the print today and saying with 1.7 million jobs printed in the quarter, hard to imagine that we're in a recession right now.
It's hard to see. This is a strong report, and what it underscores is the incredible resilience of the labor market recovery. As you said, we're seeing about 560,000 jobs a month over the last quarter, and that's been consistent over the last year. And importantly, we're seeing that in broad breadth. And of course, we see the unemployment rate now down to 3.6%. We've not had an unemployment rate lower than that in the last 50 years. There's only been 3 months in the last 50 years that the United States has had an unemployment rate lower than 3.6%. So we're continuing to see a lot of momentum and strength in this labor market recovery.
Labor force, 62.4. We're within a stone's throw here now of getting to pre-pandemic levels. Do you think that's going to happen? And why is it up for 3 straight months?
Well, I think you're raising a really important point. If you look at labor force participation, we've had a lot of talk about people getting back to work. The 12-month increase in labor force participation over the last year is stronger than at any time in recorded history in the U.S. And labor force participation has come back stronger in this recovery than any of the past 4 recoveries. We're seeing that accelerate over the last couple of months. That's a very good sign. It's a sign that people are getting back into the labor force. We're seeing more segments of the population get into the labor force as well. And that's, of course, good for the question on the long term of price pressures in the economy. We need more people to get into the labor force, but what we're seeing is that happening at a historic rate right now.
Well, Brian, Jim Cramer, I am concerned that the wages are not growing as fast as inflation. Don't want guns and butter. You know that it's a Pyrrhic victory to have tremendous employment growth if the price of everything is going higher. What are you going to do about it?
Well, number one, we are continuing to see strong wage growth, and the wage growth in the bottom half of the income distribution is continuing to drive that in an outsized way, so that even in real terms, we're seeing strength in that wage base at the lower end. But you're absolutely right. We need to focus on costs and prices. The Federal Reserve is acting on the monetary policy side. From our end, we're focused on where we can actually bring price pressure down and lower costs for consumers. I'd point to what the president did yesterday, an unprecedented and historic step to use the Strategic Petroleum Reserve to put 1 million barrels a day of oil onto the market in this short-term bridge over the next several months as U.S. producers ramp up. That's a step that we can take. We've seen some moderation in the price of oil as a result. And we're going to keep looking for places where we can lower costs. There are a lot of places where we could actually lower the costs of lower-income families today in a way that wouldn't add to inflationary pressure. Those are the kinds of things that we should prioritize in this economic moment.